roll call. Let your voice be heard. Say every single word, from the low notes to the sky. Throw your hands up high.
You got a light, buddy?
Yeah, sure, kid. There you go.
And your wallet.
Nick, give him your wallet.
If it shakes the room, that's how you know it's you, yeah. Oh, yeah. You got a truth tucked deep in your chest, heartbeat tapping out, say it, confess. Crowd might stare, let them do what they do. They never held a fire living in you. Let your voice be heard. Say every single word, from the low notes to the sky. Throw your hands up high. Let your voice be heard, loud, clear, undeterred. If it shakes the room, that's how you know it's you, yeah. Speak up, name your dream out loud. Stand up, you're the leader of this crowd. One spark, one shout, watch the silence melt. That power in your mouth is the truest thing you felt. Let your voice be heard. Say every single word, from the low notes to the sky. Throw your hands up high. Let your voice be heard, loud, clear, undeterred.
Welcome once again. Let Your Voice Be Heard Talk Radio. Again, my name is Cloyd Holmes. I am the host of Let Your Voice Be Heard Talk Radio. We have another exciting, awesome, inspiring, encouraging show. An inspiring, encouraging guest. We're being blessed tonight again. It's your second time here, Neil. That makes you Let Your Voice Be Heard Talk Radio family. You are now a part of the family. So, and people here know who you are. At your second show, people know who you are. This is Niel Fishman, everyone. We're blessed to have him here to tell us about something that I feel is super important. I'm learning so much of how to stay out of trouble, Neil. You can show me how to stay out of trouble, man.
Well, I can help you keep out of certain trouble. There's other trouble.
Well, the other trouble I don't worry about. That this kind of trouble about your CPA. Just give you guys a little bit about Neil. Neil's a CPA, born in the Bronx. He gave us a little bit of his story last time he was on here. Raised in New York, in Oceanside, New York. That's in Nassau County, Long Island. Neil is a CPA. He went to the University of New York of Oneonta. Is that correct? Did I say that right?
You said it right.
Oneonta is certified public accountant. Neil's father was a CPA as well?
Yes, he was.
Yeah. And let me see. November '89 is when you worked for his practice, correct?
That's when I joined, yes.
And you joined in '89, and you took over the business in '01, is what you told us.
2001, yes.
2001, yes. We had there's so much information, so much valuable information that you gave us last week. I'm not gonna try to recap what you said, because I'll mess it all up. But you specialize in tax returns. Is that correct?
Yes.
Mm-hmm. I'm gonna start this off with a question. I'm gonna start it off with a question right after the rip, and you can take off from there. This is Niel Fishman, guys. He's awesome. You got questions about things, you better ask. You need to ask now, because I know I got a lot of questions. Neil, what trends are you seeing in the tax return business right now that weren't happening before?
Well, one trend that I see happening now in particular is the fact that there are more non-credentialed people who are doing tax returns. Now, let me explain what I mean. Now, credentialed means you're a CPA, certified public accountant. You can be an attorney. You have your JDs. A lot of attorneys do tax work. Then there is another credential called the Enrolled Agent, EA. That is a credential you have to get from the IRS by passing a couple of tests to do that. Now, if you have one of those credentials, now, first of all, let me preface to say that I am not saying that credentialed is good and non-credentialed is bad, but if you are credentialed, there's oversight. If someone has a problem, they can file, there's an organization to which the taxpayer can file a grievance with.
Mhm.
If you are non-credentialed, there's nobody. Now, back about 15 years ago, the IRS attempted to regulate tax return preparers. And this was basically for the people who are non-credentialed, because if you're already credentialed, there's oversight. But for all those other people, there isn't. So they tried to do it themselves. And it ended up going to court. It culminated in a case called Loving v. IRS. The summary judgment was against the IRS because the IRS was taking a law from the 1880s to justify their attempt to regulate preparers. And the court said they overstepped their bounds. Then they did their mandatory appeal. They lost. At which point, the then commissioner of the IRS, a man named John Koskinen, said, "We're now going to wait for Congress to grant the authority." There has been legislation in the last several congresses called the Taxpayer Protection and Preparer Proficiency Act. This would give the Treasury Department, therefore the IRS, because the IRS is part of the Treasury Department, the authority to regulate preparers. Unfortunately, it gets introduced, it goes to committee, it sits there. I know that there has been other legislation out there that is attempting to do the same thing, but it's part of other bills, and you're waiting to get everybody to sign off on every aspect. If you recall, the prior administration tried passing a be-all, end-all bill, which they didn't get. They passed several aspects, but they were able to pass several provisions of it on their own. The current administration did pass what they called the One Big Beautiful Bill. I call it something else, which also starts with B. But they have that, but we're still waiting for that. Now, the problem is that the non-credentialed people, again, there are some people who are very good at what they do, but when it comes to taking a test to get a credential, they couldn't pass it to save their lives. But that is not, I fear that is not the majority. The big amount, the greater amount are the people who are looking into this to make a buck. And to make a quick buck, and they don't care whether they do it right or not. I'm sure that everybody, especially from January into April, when they are at an intersection, they see these little signs on the side of the road, get back money, get back so much per person. Basically the people are guaranteeing not only will you get a refund, but you will get a significant refund. Now, as I said a few years ago when I was participating at a IRS press conference down here in Florida regarding cybersecurity and security in general, I said then, if somebody comes to you and says they will guarantee you a refund, turn around and walk in the other direction, please, because they do not have your interests at heart. One thing that I mentioned last week, which I think you may remember, Cloyd, is that every now and then somebody comes to me, they bring last year's return, and it turns out that where the preparer would sign it is either blank or it says self-prepared, and I ask the question, did you do it yourself? And their answer is no, and I point out why I'm asking this question. Because if, and right now that's a very big if, you get contacted by the IRS to come in and talk about your tax return. If it's indicated that you did it yourself, they will hold you to the same standard as me or any other preparer, paid or otherwise. So no, my thing is I want people to be educated. I want people to know that they have to ask questions. No, just because I do something for you, hey, I could have made an error. If I've made an error, I'll admit it. I'll correct it. If a client gets a notice and they give it to me and it turns out that the error was on my part, whatever I have to do to rectify it is out of my pocket. I do not charge the client for that.
Wow.
If, however, the client forgets to give me information and they get a letter, and it turns out that was the reason why they got the notice, that's another story. But if it's my error, that's how I pay for it.
Wow. Man, this is good stuff. This is good stuff to know. And I thank you for wanting to educate people on these issues, because nobody does that.
No,
because they don't want you to know, because that's going to kill business.
right. No, I try to take the time when I call. No, I will call you when I think I have your return done, and I will go over it with you. I will go over certain aspects of it with you. I'll try to explain why your income is higher or lower, why your tax liability is different, why you're getting back less than you did the year before, why you owe money. What are the significant changes in your tax return that came up with a result that's rather different than it was the year before? Are you, Claude, you're from New York originally also, right?
Yes, sir.
Remember a clothing store called Sims?
Yes. It was a men's suits.
Right.
I remember buying suits from there.
Right. But what was their catchphrase? An educated consumer is our best customer.
Mm-hmm.
Now you go to my website and you see our catchphrase is get more than just a tax return.
Mm-hmm.
But if you want to ask for a secondary phrase is an educated client is my best customer. Mm-hmm. I want my clients to ask me questions. No, put me on the spot.
Mm-hmm.
Make me explain why the numbers are coming out this way as opposed to other ways. I've gotten calls from clients over the years saying, well, my neighbor got back so much money. My response is, well, I don't do your neighbor's return. I don't know what's involved in it. And more importantly, I don't know who they're using as a preparer, and I don't know what they did. A lot of things when it comes to preparing a tax return are black and white, cut and dry. This is how it goes, that's it. But there are various shades of gray, but they will vary from one tax return from one client to the next one.
Mm-hmm. Well, let me ask you this.
Sure.
With the let's say technology, to where it's come from, where it is today in comparison to even maybe when you started, when you took over your dad's business, to where it is now. Let me ask you, where is the accounting business going now? Where is it going? Is it because are people using you more, or is it going away? Because I don't know. There's an app for everything.
Yes, but an app cannot deal with the shades of gray.
I agree.
But when you ask about the technology, I remember my father got his first computer in his office back in 1980. Okay? This thing was about, I would say, 18 inches square. It was about 4 feet high. It originally used, I think it was 12-inch floppy disks for the data and for the programs that they were using it for. Also at that time, tax returns were being I'll use the term outsourced, but what I mean by that in this case is there were companies that they would send you the equivalent of an organizer. No, you would fill it out with the information you got from your client. You would then send those documents back to the company. They would prepare the return. They would send it back to you to review to make sure it was correct or make changes. Well, now computers, okay, PC, if you have a PC by itself, it could be maybe 18 inches by 12 inches, maybe 2 or 3 inches wide. There are some tax softwares which are strictly on the cloud. So all you have to do is access the cloud. You can do them from anywhere.
Mm-hmm.
So the technology is definitely improving, but the technology is not the be-all and the end-all. If you remember original Star Trek from the 60s, do you remember the episode The Ultimate Computer, where the Enterprise was fitted with this computer that could handle everything, the M5?
No, I haven't seen it.
But anyway, and they were going to use it in war game simulations, among other things. Well, the computer goes haywire. But shortly in the beginning of the episode, when it does a few simple things which shows that it could possibly work, Spock, the Vulcan, is asked how he felt about, what he thought about computers. And his answer was, computers make excellent servants, but I do not wish to serve them.
Okay.
It is the shades of gray is where the differences are. Computers, the technology will improve, but the computers will not know how to deal with the shades of gray.
There is thank you for that. There is a question in the chat. Let's see. I think it was Karen. Karen, you have a question in the chat. Let's see. Yeah, I think.
Yes, I had a question.
Okay, go ahead. Answer your question.
Okay, so when you going back to what you said previously, that these they're not certified or whatever, so people go to like the H&R Blocks and Hewitt, whatever that Jackson Hewitt or whatever. What my concern is, you see all these signs, not just about they could get a lot of money back, but they get money in advance. What are the consequences to that, especially if it's not prepared correctly and they got $5,000 up front? What are the consequences to that?
Well, if you're paying somebody $5,000 for a personal return?
No, I'm saying that I go to a tax preparer, and
right.
they get me money up front before the
they give you an advance against the refund.
Right.
Okay, well,
the problem.
Okay, so they're getting, well, that's been going on for quite a few years now. And it's now, first of all, as a preparer, I'm not allowed to take money out of your refund. You have to pay me separately. That's first and foremost. The places that do that are giving first of all, they're not giving you the full refund in advance.
Mm-hmm.
They're giving you a percent. They're only giving you a portion of it. Because remember, they're going now, by giving you that advance, your refund that's going to be coming to you is not going to go to you. It's basically going to go to them. It's going to go to a financial the financial institution that they're working with, where they got the advance money from.
Mm-hmm.
So their fees, so they're going to get their fees out of that, and then if there's anything left over afterwards, you would get the additional difference. But it is something I do not deal with, so that is my understanding of it.
Mm-hmm.
Don't take it as gospel. But, But a lot of people, they want that refund. Remember, they're willing to pay that fee for the refund because they're saying you got a $5,000 refund coming to you, but here is the fees for $5,000. So they're only going to get, say, I don't know, $4,500 or $4,000 because out of the $5,000 refund, they're going to get their fee plus they're going to charge you for. I saw this a few years ago in an article in the New York Times. They charge for processing. They charge you for submitting the tax return. They charge a fee for accepting the refund. They charge a fee for giving you that advance.
So basically, it's a scam, kind of.
Well, you're still getting the money. You're still getting the majority of your refund, but those little fees can add up.
But suppose, okay, like you said, let's say the person didn't submit all the correct paperwork or whatever, and then there's a problem with the taxes. Then what happens?
Well, first question, okay, so if you're my client and you get the letter, you're going to call me and say, Neil, I got a letter. My response is, before you do anything, send it to me first. And I'll give this example. Today I got a call from a client. Actually, the daughter of a client, because it's an older woman. They got a letter from the IRS saying that they owed X amount of dollars. Well, it turns out the difference was the fact that I put down that estimated tax payments were made. And the IRS, and based on the information that the IRS gave, based on the amount that they're saying that this person owes before penalties and interest, it was the estimated tax payments. They're saying that the IRS, have no record of them. So I told the client, this is what you need to do. Go through your bank account, find out, confirm whether or not you made the payments. If you made the payments and you made them by check, go to your bank, your financial institution, get copies of the checks front and back. Front and back. Send those to me and then I can compose a letter. Because it is quite possible that if a check was sent in, it got applied to the wrong account. Remember, it's not just, everything is not by computer. And while there can be glitches in computer, people can also make a mistake. They could put down they can be given a bank account information, and instead of putting down an 8, they put down a 0. So it's going to a completely different account, or coming from a completely different account. So mistakes can be made.
Thank you.
Thank you for that, Neil. We got some more. I know this subject is going to be hot. Well, Jessica Smith says, "Where do you go?" LOL. But now, with her question, where do you go? I'm gonna add on to that. Give us the benefit of using a CPA, because a regular person is going to be more inclined to use H&R Block or one of those big firms,
or they'll use the person in the neighborhood who may or may not.
Or they may use that. Right. But give us the benefit.
Okay. Well, here's a very important benefit of someone with the CPA credential. My license, depending on the state, has to be renewed every couple of years. In Florida, it's 2 years. In New York, it's 3. One of the requirements for my license renewal is that I have to do continuing professional education, CPE, every year. Now, basically, I have to do an average of 40 hours per year. And that's from both states. The amount of hours, I think that's consistent. States are either 2 or 3 years, but I have to do this continuing education. I have to be up to date on whatever changes, whether there are many or just a few. If someone is just going out and buying a tax software program and they're just entering the data, are they reviewing it? I know that I am reviewing it. So, Karen, when you bring me your return and I enter all the data, and I can, and first of all, I do not, and unlike a tax preparation office, Block, Hewitt, Liberty, I don't do it in front of you. I do it at my own pace. But after I've got it entered, I set it aside. I come back to it some point later and I review everything I entered to make sure that I've got it entered correctly. The tax preparation offices, and again, I'm not saying this as a criticism, they make their money on volume. It's how many returns they get done. Basically, you go in and you have your appointment, and when your appointment is done, they're handing you your tax return. It's finished. I review the information. No, you give me your information for this year. I'm comparing it with last year's information, first to make sure that we're not missing anything, and to ask questions if something is missing. For example, last year you had consolidated statements from 2 brokerage houses, and this year you only have 1. So where is the consolidated statement from brokerage house A? Because all I see here is brokerage house B. And very simple answer. I had my financial advisor at A. During last year, they moved over to brokerage house B, and I went with them. So now I've got one from each company. This year, they're at brokerage house B all year, so I just have it from that one. A lot of these questions can be answered very simply, but you still have to ask the questions when the questions are warranted. Yes, I see someone wrote, I have an accountant. That is great. I drop off all my paperwork, receipts, and he does it all. The question to that person is, if they have questions, do they call? If you have questions about the return, do you speak with them when the return is done? Do they discuss it with you? Just asking the question. Okay. Now I see here.
It says yes. It says if you haven't filed taxes in a really long time, should you even start doing them now?
Yes.
If so, what might happen to someone in that situation?
Well, first of all, I'm just going to ask the question, how many years are we talking about? But it's like when I had this client my first year down here in Florida, I had to do 6 years tax returns because I hadn't filed them. Now, one of the drawbacks is if it's a tax return that is more than 3 years delinquent, more than 3 years old, 30, 40 years, better do at least 6 years, better do the last 6. Okay, but the thing is that any tax returns you submit that are more than 3 years old, if you were due a refund, you are not going to get it. But if you owed money, you're going to have to pay it. And if you submit multiple year returns, and some of those returns have balances due, and the more recent ones have refunds, they will take those refunds and apply them against the outstanding balances first. Okay, Yolanda, what are you confused about?
Well, listen.
Yolanda, are you there?
Yolanda's there. She's writing, but she ain't actually talking. Yolanda?
Don't be shy, Yolanda.
Well, I have a question. So if you're saying 6 years, so if that person said 30 or 40 years or 10 years or whatever, you should do the 6 years?
I would do the 6 years at least.
Okay.
What happens to the rest of it?
Yeah.
Well, the question is, does the IRS know? Unfortunately, the IRS records.
So
the IRS records can only go back so far on certain things. They only never. The IRS is trying to modernize. The problem is their purse strings are controlled by Congress, so they don't always get all the money that they need.
So she said, Yolanda said, so you never get another refund.
No, I'm not saying that.
I'm curious, how would you go about getting another refund? Had you, and now that's extreme. 30 or 40 years, that's extreme.
Yeah, if you're all, well, first of all, if you're all caught up and you're due a refund, you will get a refund.
How could you catch up 30, 40 years?
I don't know of any firm that can go back that far. I mean, like, even with computers, there's limited space on the computers. I mean, how many years of tax preparation software can I have? And not only that, if at some point I switch from this tax software to that tax software, and then I get a new computer system, am I going to think to keep all there's only so much space you have on the computers.
I
You know,
understand
in the early
that.
remember in the early days of computers, they didn't have a lot of space and programs took up a lot of space. Computers are smaller, they have more space, but still the programs take up space. So how many years can you keep? I mean, I have on my software, on my computers, only going back to like 2020 at this point.
Neil, isn't it isn't it not how many years you can keep? How many years does the IRS have? How many years can they keep? Because that's who is going to be at you. That's who you got to deal with. I'm trying to figure out how far can they go back.
Well,
You said 6 years.
well,
What about if it's 10 years? 15,
okay, so here,
15, 20 years?
technically, if you get you get an invitation from the IRS,
Mm-hmm.
they can automatically go back 3 years.
3 years.
3 years. They can go back to they can look at your last 3 years.
Okay.
Based on that, they could even go back another 3 years, so they could go back 6 years altogether.
Mm-hmm.
If they, for the most part, if they want to go back further than that, they have to show that there's fraud. And then they can go as far back as 1916. And Karen's going, what do you mean 1916? Right, Karen? Because that's when the income tax, as we know it today, was added to the amendment was passed that created the income tax, or the start of the income tax that we know today.
Wow.
Okay,
Gus,
I got a question.
all right, go ahead.
So you know that in the state of Florida, I think DeSantis is trying to take away property taxes. You think take away income taxes?
There is no income tax in Florida.
No, I mean take away. I don't have to do taxes anymore. Regular taxes.
No, they can't undo. They cannot undo federal income tax.
That ain't gonna do happen. That'll never happen.
That's state income tax, federal income tax. Two different animals.
Right.
Gus says, what about business taxes?
Same thing. They can go back 3 years for starters. They can go back 6, and again, they've got to prove for it. Now, one thing that goes beyond that 6-year statute are carried forward capital losses. Okay, capital losses. Those are the profits or losses from the buying and selling of stocks, bonds, and mutual funds. Now, let me explain. There are short-term and there are long-term. The line of demarcation is 1 year. Anything that's under a year that you owned and sold, that's a short-term gain or loss. If it's been owned for at least over a year, that's a long-term gain or loss. So first thing you do is you determine your short-term gains and losses, you net those out. Your long-term gains and losses, you net those out. And then you take those two numbers, the net short-term gain or loss, the long-term gain or loss, you net those out. So now, if you have a net capital loss, because capital losses can only be used to offset capital gains. So if you have losses in excess, you are only allowed to take $3,000. Hello?
Oh, go ahead.
You can only take $3,000 against your other income once you've wiped out your capital gains. And that number, and if there's still anything left over, that gets carried forward from year to year until they are used up. Okay? But if, let's say, and we've had some things in the last few years, like for example, back in 2009 when Madoff hit the fan, and you had people who had they had hundreds of thousands of dollars in capital losses. They're still using, and a lot of them are still using that up. So now if the IRS were to question about your capital losses, if that's more than 6 years, they can question that as far back as they want. They can go all the way back to when the huge net capital loss was created.
Wow.
I see Veronica had her hand up.
Yeah, Veronica has her hand up.
Hi, Neil. How are you?
Hey, how are you, Veronica?
I'm well. So let me ask you, if you are up to date, is there any way to, like, let's say I realized I forgot stuff last year or the year before and, I want to go back. Is there any way to go back and make changes?
Yes.
Really?
Yes, you can go back and amend your return. No, you don't. No, it's like clients get letters from the IRS saying we've been given information to indicate you left something off. Okay, that can
Do
happen.
you actually get a
anytime.
refund?
What?
They actually refund you?
Well, first of all, they'll send you a letter saying you could. Yeah, if you left something off and it turns out you're due a refund, they will give you back the money. Yes.
Wow.
But you've got to.
Interesting.
But with the amended return, that is for a personal return, that's a 1040X. You have to explain why you're filing an amended return. And not only are you submitting the 1040X, but you need to submit the additional schedules to explain that, and you may even have to give them copies of the source documents just to verify why you're claiming these additional deductions, or I gave you my brokerage statement, turns out I got a corrected statement 6 months later. And so numbers went down, so now you get to file an amended return.
What are some of the things that you can amend with? Like, what are some of the write-offs that you can amend?
Well, it's basically what didn't you give me? Were there income items that you did not give me, or were there trades that you did not give me, that these trades resulted in losses? You already have it. You have a net capital gain, so now we're going to turn that capital gain to a capital loss. Were there deductions that you did not give me? For example, you could have somebody in an assisted living facility. Okay? Well, in some of these facilities, especially in some of these facilities, you get the person living there will get a letter saying a percentage of their monthly fee can be claimed as medical. In some cases, we're not given that, and then later on, we get that. That would be a reason to file an amended return, because now we have this additional deduction. And remember, in some of these facilities, you're paying $7,000, $8,000 a month, and depending on your individual situation, if it's just assisted living, where you could be living on your own still, then you can only take the percentage. But in other cases, if the person is there because they need to be there, they cannot live on their own. So this is medical. They're paying these fees for medical purposes. That's fully deductible.
Now, let me ask you this. Let's say in business taxes, right? Client owes money still, they didn't pay. What about that? What about stuff like that?
Okay, are you on the cash basis or the accrual? No, the client owes you money.
Right.
Okay, are you on the cash basis or the accrual basis?
I don't understand.
Okay,
Cash.
okay. There are two forms of accounting. There is the cash basis and the accrual. ACCRUAL.
It'll be cash.
I can say it's a cruel world. No. So the cash basis of accounting is I record the income when I receive, not when I send out the bill, but when I receive payment and I deposit it. I record the expense when I write the check, or I go online and I make the payment. That is the cash basis, when the money goes in, when the money goes out.
Right.
The accrual basis is when I send out the bill. So now I'm recording the income. But of course, at that point, I haven't received the money. So you have this account called accounts receivable. Right there. So I've already picked up the income. I have an accounts receivable. So when I actually get the money, I'm not reporting it as income. I'm instead reducing my accounts receivable. But now let's say you've got somebody there who hasn't paid you, and they've gone out of business, or they just say, I'm not paying you. So now you forgive the debt. So I say, fine, I'm going to forgive the debt. It's a bad debt. I'm never going to collect it. I'm still going to reduce my accounts receivable, but instead of recording that I deposited income, I have an expense account known as bad debts. So it's an additional expense. So
Okay.
that way, I'm not recording it from 2 years ago. I'm not going back and restating that year's return on this year's return. When I'm saying I'm not going to collect it, that's when I write it off. And therefore, that's an additional, that's a non-cash deduction because I already picked up the income even though I didn't receive it. But now I'm writing it off because I know I'm not going to get it.
Oh, you can write it off.
That in the year you decide you're writing it off.
Okay. Thank
Now,
you.
if you're on the cash basis, doesn't really matter. I mean, if you were on the cash basis, if you wanted to put a bad debt on your records, you would have to record. You'd have to put down a deposit. You have to say, I billed Veronica $1,000. She told me she's not paying me, so now I'm going to pick up $1,000 of income. But instead of showing $1,000 being deposited, I'm going to show it as a bad debt, as an expense, and it washes out. But now you have to be careful. But now those people have to be careful. If anybody here has ever had a credit card, which they have been told that they have got that they didn't pay it off, and the credit card company says we're canceling your card, and we are forgiving the debt. You're going to get in the following year. You're going to get a 1099-C, C being for cancellation of debt, and then that becomes income to the recipient.
Well, what about if like the client owed money and the work was done and they didn't finish paying off their bill?
Again,
that.
they're not paying it off. Again, cash based. Either way, you're either writing off a bad debt, and you're being done, and you're writing off you're on the accrual basis. You bill them for $5,000. They paid you $4,000. They're not paying the last $1,000. You're on the accrual basis, so now you're going to wipe out your receivables by recording a bad debt.
Okay.
You're not collecting the money.
Thank you.
You're welcome.
And this is really good stuff. I already knew it was gonna be a hot topic, Neil, and that you're gonna have a ton of questions fired at you. I want to know, have you thought? I think we talked about this already. Have you thought about writing a book, or have you written a book?
Have I written a book? No. But as the song goes, if they asked me, I could write a book. I've thought about it.
I mean, you have a plethora of knowledge on this subject, and so I'm like, wow, where can I get the book?
But it's not just this. Remember, this is also intertwined my activity with my organization, National Conference of CPA Practitioners. I have one is every year. Our spring meeting is in Washington, D.C., and we take one day of those meetings. We go to Capitol Hill, and we meet with the offices of members of Congress, House and Senate, both sides of the aisle, and we're talking tax issues. We get these issues by doing our work. We see inequities within the tax law. We try to correct those. We also try to bring other issues to the attention that would help our profession. And also, because of my involvement, 2015 to 2017, I had the privilege of serving on IRSAC. That's IRSAC. That is the Internal Revenue Service Advisory Council. Now, you have to apply and be selected for this. And what this is it's a collection of people around the country, CPAs, attorneys, enrolled agents, and other professionals. Like the time I was there, they had somebody who was an art appraiser on one of the, as they call them, one of the subcommittees. And what it is that as big as the IRS is, I'll get to at the beginning of 25, they had over 100,000. They had over 100,000 people. They're now down to about 85. Attrition and retirements and so forth. But the IRS is always looking for outside opinions on how to improve what they do. And I was on the subcommittee I was on, one of the issues that I worked on all 3 years were issues dealing with identity theft. No, because that is still a thing that's still a big thing with the IRS.
Yeah.
And people, it's like, but of course, you don't find out if you're a victim of identity theft in that respect until you get your tax return submitted, and I get an email back that it was rejected through my tax software, and then I have to go and find out why. And if the reasons given is that we already received a return with this social security number, which means you were a victim of identity theft.
Wow. Thank you for that, man. I see Lazaro, you have your hand up.
Yes, I
we hear
can.
you.
Good. How are you, Lazaro? Let me phrase that. I'm saying they're trying to modernize. They're trying to modernize, but in order to do that, you need money. And as I said, who controls the purse strings in Washington? It's not the IRS. That's Congress. That's an Article 1 venue. Congress controls the purse strings. It's specifically stated in Article 1 that all legislation regarding spending has to come out of the House Ways and Means Committee.
So they're not.
They're the ones that control the purse strings.
So the IRS is just trying to modernize.
They're trying. They know they need money for the equipment. They need money for computers. They have a multitude of computer systems, which is not necessarily a bad thing because they're constantly getting hacked or they're constantly being attempted at being hacked.
Mm-hmm.
And the one good thing about having multiple systems is it's harder for the hackers to get in and do for the most part, do significant damage.
Mm-hmm. Well, you said last week on the show, you said that the IRS, because of the lack of funds, I'll say, that they have, I don't know about stopped, but they've slowed down with audits. I want to ask you, what triggers an audit?
Well, there could be several things that could trigger a audit or a desk examination. The IRS, I know this from years past attending meetings there, they might say, we're going to take a look at personal returns that have something specific on it, like Schedule C, or they're itemizing and they have a lot of medical expenses. There could be things like that. They're looking at returns that might have something specific in them. That's one thing. Another thing that could trigger is if they pull returns and they do what's called an economic reality test. So, for example, I'll use New York. I'll take Florida down here. So let's say, if you say Boca Raton in Florida, most people think of that as a extremely well-to-do community. Most people who live there are extremely well-to-do. Costs a lot to live there.
Mm-hmm.
Okay? If you submit a tax return that shows very little income, but says you live in Boca, there's something called an economic. People have ever heard something called an economic reality test. Does your income make it reasonable for people to think that you could actually live in a well-to-do, in a very upscale area?
So IRS would come at that with, wow. No wonder they ain't got no money.
No, it's the government that ain't got no money. We have a $40 trillion deficit.
I mean, they said, wait a minute, this guy lives in Boca Raton. He had, he has a job at 7-Eleven. How's he living over there? Let's go audit him.
Mm-hmm.
Yeah. Wow.
Now, there could be factors. Let's say this guy is only 25 years old and he's living with mom and dad. Okay, fine. He doesn't have to pay rent. He doesn't have these things. Okay, so they would examine, he would give this information. Okay, he's good. But now let's say you're the homeowner. Your property taxes are $15,000 a year. You're only making $40,000 a year. How are you paying your property taxes? How are you living on $40,000 a year? And I'm assuming that is your total income. Remember, there's on your tax return, and I'll use this example, you are showing interest income. You're also showing your tax exempt interest income on the return. Seems here we got 5 minutes left.
Yeah, you said that they have cut back on not doing audits now for whatever reason you had given.
In the last under the previous administration, there was a legislation called the Inflation Reduction Act. Part of that legislation was to give the IRS $80 billion over a decade, so $8 billion a year. And that money was specifically allocated. A little more than half was for enforcement. There was also money for modernizing and other things. You know, when that bill came out, the IRS is going to be hiring 50,000 auditors. No, they're not. There aren't 50,000 auditors to hire. Because it's not just the people who do the examinations. It is also all the support people.
Right.
That work at the Internal Revenue Service. Those people, all these people are retiring. You know, if they've been there for 20, 30 years, they're retirement eligible. They're retiring. You've got to bring in people. Right. And of course, now you've got to train those people, but they're not all auditors.
Yeah. So they're not doing audits, so to speak.
Well, they've cut back on the number of audits because now they can't hire as many people as they would like. Now, part of the modernization would be to get rid of some of the support personnel, but it's also but also, unfortunately, in some cases, like there are vacancies coming up, people retiring, and they are not replacing them. Whether they're a secretary or whether they're doing examinations, they're not replacing them.
Do you receive, I'm sure you do, updates on things that are happening? How often do you receive those? You as a CPA?
Well, my organization, we are a liaison. We're what they call a stakeholder liaison with the IRS. The IRS's outreach is a department known as NPL, that's National Public Liaison's Office. They have meetings 10 months out of the year. I think August and December is when they don't. I get the schedule, but these are half-day meetings where the IRS is letting us and other organizations know what's going on at the IRS, and we're able to ask questions, provide input, and then we're allowed to disseminate that information to our members. So do we get everything all the time? No, but we get it. But we do get information.
Before we go, Neil, let me ask you this: how do you get your clients, and how can one of us contact you if we need your services?
Well, how do I
That's the idea here. Let your voice be heard. We want to get you out there.
You go back to when my father was running the practice, and before you got your referrals either from bankers, attorneys, financial advisors, who they have a client who needs a CPA to help them with whether it's their business records or their personal. You also got referrals from clients. Mm-hmm. Like, Claude, you know somebody, and they say, Claude, I need a good CPA. Claude, why don't you go use my guy, Neil? He's really good. Mm-hmm. And so now people are finding me on. So in addition to that, now people are finding me on the internet.
Okay.
They do an internet search, CPAs in Boynton Beach. I called somebody who called me this afternoon. I asked, how did you hear about us? Oh, they said ChatGPT. So ChatGPT is going through the internet and finding names.
So give us how we can get
Okay,
you.
so it's very simple. My website is Fishman Associates, that's FISHMAN FishmanAssociates.com.
That's it.
And I am Neil, Neil, at FishmanAssociates.com. But you go to my website, you can send you can say you're looking for a CPA. First of all, my contact information is right there. My email address, my office number, the office phone number, the office hours, and
because this is something that's really important and something that needs to be heard. And what a better place than let your voice be heard to have you here. We love you, man. This is your second time being here. As I said, you are now family. So you guys got a family member that's a CPA. Use him. He left his all his information. We know how to get in contact with Neil as far as helping us out with our taxes and all of those things that, or someone that you know may need help.
And even though I'm in Florida, Boynton Beach, Florida, I'm originally from New York. I have a New York CPA license, a Florida CPA license, but I can prepare tax returns regardless of the state that's required.
Thank you so much for that. My panel, you guys know I love you guys, man. I love you guys. You guys are awesome. Neil, you rock, bro. And
Thank you.
We'll see you next time, man. We're going to see you next time. I'll let your voice be heard, talk radio. You guys, I love you. I'll see you guys next time. This your boy now.
Step in, lean in, mic on, and begin. Hey!
Gotta run.
Whoops. You can't do that. I gotta hear my music, man. I gotta hear my music.
Step in, lean in, mic on, and begin. Hey! Been quiet too long, chewed up tongue, turned down songs, clock keeps ticking on the wall, but your name's still missing from the roll call. Let your voice be heard, say every single word, from the low notes to the sky. Throw hands up high. Let your voice be heard, loud, clear, undeterred. If it shakes the room, that's how you know it's you. Yeah. Oh yeah. You got a truth tucked deep in your chest, heartbeat tapping out, say it, confess. Crowd might stare, let them do what they do. They never held a fire living in you. Let your voice be heard, say every single word, from the low notes to the sky. Throw your hands up high. Let your voice be heard, loud, clear, undeterred. If it shakes the room, that's how you know it's you. Name your dream out loud. Stand up, you're the leader of this crowd. One spark, one shout, watch the silence melt. That power in your mouth is the truest thing you felt. Oh, let your voice be heard, say every single word, from the low notes to the sky. Throw your hands up high. Let your voice be heard, loud, clear, undeterred. If it shakes the room, that's how you know it's you. Yeah, that's you. That's you. Step in, lean in, mic off, never again.
It's your boy now.
Recording stopped.